Hey there, savvy investors! Welcome back to CRAIGTRADER, your one-stop shop for all things stocks and investing. At CRAIGTRADER, we believe that knowledge is power, especially when it comes to your financial future. Whether you're a seasoned trader or just starting out, we're here to guide you every step of the way. So grab your coffee, settle in, and get ready for an information-packed session as we break down the complexities of the stock market. Today, we're tackling a topic that can seem daunting to many: the stock market. What is it really? How does it work? And most importantly, how can you, as an individual, participate in it to grow your wealth? By the end of this video, you'll have a solid foundation to start your journey as an informed investor. Before we get started, a quick reminder. The information shared here is for educational purposes only and should not be considered financial advice. Always do your own research, consult with a qualified professional, and make decisions that align with your individual risk tolerance and financial situation. Hit that thumbs up button, subscribe to the channel, and click the notification bell so you never miss an update. For more stock tips and exclusive content, click the link in the description and subscribe to our free newsletter. Imagine a bustling marketplace, but instead of fruits and vegetables, it's filled with pieces of companies. That's essentially what the stock market is. A vast dynamic network where buyers and sellers trade ownership in publicly listed companies. These pieces of ownership are called stocks, representing a claim on a company's assets and earnings. When the business thrives, your slice becomes more valuable. Conversely, if the business struggles, the value of your slice might decrease. The stock market operates on this fundamental principle of supply and demand. As an owner, you have the potential to profit from the company's success through dividends or capital appreciation. The concept of trading shares in companies dates back centuries, but the modern stock market has its roots in the 17th century. The Dutch East India Company, established in 1602, is often credited as the first company to issue publicly traded stocks. Fast forward to 1792, and we witness the birth of the New York Stock Exchange under the iconic buttonwood tree in Lower Manhattan. Today, investors can buy and sell stocks with a few taps on their smartphones, connecting them to markets across the globe. The stock market plays a vital role in the overall health and growth of an economy. It serves as a barometer of investor sentiment, reflecting confidence in the business world and the future prospects of the economy. When stock prices are rising, it generally indicates optimism about the economy, leading to increased investment, job creation, and consumer spending. Conversely, a decline in stock prices often reflects pessimism and can lead to reduced investment and economic slowdown. Now that we've covered the what and the why of the stock market, let's delve into the how. Buying and selling stocks might seem complex, but it's straightforward thanks to online brokerage accounts. Think of a brokerage account like your gateway to the stock market. You can buy or sell stocks using different order types, such as market orders or limit orders. The key takeaway here is that you're in control. You decide which stocks to buy, how many shares to purchase, and when to sell. Stock prices are in a constant state of flux, influenced by a multitude of factors. Company-specific factors include financial performance, management changes, and product launches. Industry trends also play a significant role. Macroeconomic factors such as interest rates, inflation, and government policies can create ripple effects across the entire market. Understanding these factors can help you make informed investment decisions. Trying to track the performance of every single stock in the market would be like trying to drink from a fire hose. That's where stock market indices come in handy. Indices such as the S&P 500, the Dow Jones Industrial Average, and the Nasdaq Composite track the performance of a basket of stocks. By analyzing these indices, investors can gauge the overall direction of the market. Understanding market trends and cycles is crucial for long-term investment success. Remember, the stock market is a vehicle for building wealth over time through informed decision-making. We've talked about buying and selling stocks, but where does all this action actually take place? Enter the stock exchanges. Stock exchanges act as intermediaries, providing a regulated and transparent platform for investors to trade securities. They set the rules of the game, ensuring fair pricing, efficient execution of trades, and investor protection. Without stock exchanges, the market would be a chaotic free-for-all. Stock exchanges streamline the trading process, bringing order to the complex world of stock transactions. They also play a vital role in price discovery, ensuring that investors have access to up-to-date information. In the United States, two major stock exchanges dominate the landscape: the New York Stock Exchange, or NYSE, and the NASDAQ stock market. The NYSE is known for its iconic trading floor, where human brokers still execute trades. It primarily lists well-established, blue-chip companies. NASDAQ, on the other hand, is a fully electronic exchange known for listing technology-focused, growth-oriented companies. The choice of listing on the NYSE or NASDAQ depends on a company's size, industry, and growth prospects. Both exchanges have their own set of rules, regulations, and listing fees. The world of stock exchanges extends far beyond Wall Street. Countless stock exchanges operate across the globe, each reflecting the economic landscape and investment opportunities of its respective region. Investing in foreign stock markets can be a great way to diversify your portfolio and tap into emerging markets with high growth potential. However, it's essential to research and understand the specific risks and regulations associated with investing in foreign markets. Now that we've explored the mechanics of the stock market and the role of stock exchanges, let's dive into the exciting world of stock trading. This is where you, the investor, get to put your knowledge into action and potentially grow your wealth. Think of stock trading as navigating a vast ocean. You need a map, which is your investment strategy, a compass, your risk tolerance, and a sturdy ship, a diversified portfolio. Before you start trading, it's crucial to determine your investment goals. Your investment goals will shape your trading strategy and the types of stocks you choose to invest in. One of the fundamental decisions you'll face as an investor is whether to focus on long-term or short-term investments. Long-term investing involves holding investments for an extended period, typically years or even decades. This strategy is often favored by investors seeking to build wealth gradually over time. Short-term investing involves buying and selling assets over shorter periods, ranging from days to months. Day trading is a prime example of short-term investing, where traders aim to capitalize on intraday price fluctuations. It's crucial to remember that timing the market perfectly is extremely difficult, even for seasoned professionals. The stock market is like a vast ocean with its own currents, tides, and occasional storms. Understanding market trends is crucial for navigating these waters successfully. A market trend refers to the general direction in which stock prices are moving over a period of time. Identifying these trends can help investors make better informed decisions about when to buy, sell, or hold their investments. Technical analysis, which involves studying historical price charts and trading volumes, can also provide insights into potential market trends. Remember, riding the market waves requires a combination of knowledge, experience, and a healthy dose of caution. Section 1. Diversification. Don't put all your eggs in one basket. Imagine putting all your money into a single stock, only to see its value plummet due to unforeseen circumstances. That's a risk no savvy investor wants to take. That's where diversification comes in, the golden rule of investing. Diversification simply means spreading your investments across different asset classes, sectors, and geographies. It's like building a well-rounded breakfast plate with a variety of nutritious foods instead of loading up on sugary cereal alone. By diversifying your portfolio, you reduce the impact of any single investment on your overall returns. If one stock or sector underperforms, others can cushion the blow. It's about managing risk and protecting your hard-earned money. Think of it like this. If you plant all your seeds in one small garden plot and a storm hits, your entire crop could be wiped out. But if you spread those seeds across multiple fields, the impact of the storm will be minimized. Section 2. Risk Management, Protecting Your Investments. Investing, like any endeavor in life, involves a degree of risk. But smart investors understand that risk can be managed, not eliminated entirely. It's about finding the right balance between risk and potential reward. Before making any investment, it's crucial to assess your risk tolerance, your ability to withstand fluctuations in the value of your investments without panicking. Factors like your age, financial goals, and time horizon play a role in determining your risk appetite. Once you have a clear understanding of your risk tolerance, you can choose investments that align with it. For example, younger investors with a longer time horizon might be more comfortable with higher risk, higher reward investments like growth stocks or emerging markets. On the other hand, older investors approaching retirement might prefer lower risk investments like bonds or dividend-paying stocks to preserve capital and generate income. Building a well-balanced portfolio is like constructing a sturdy house. You need a solid foundation, which means low-risk investments, strong pillars or core holdings, and a roof that can withstand the elements, representing growth potential. A classic approach to portfolio construction is the 60-40 portfolio, which allocates 60% of your investments to stocks for growth and 40% to bonds for stability and income. This allocation can be adjusted based on your risk tolerance, time horizon, and financial goals. Within each asset class, you can further diversify by investing in different sectors, industries, and geographies. For example, within stocks, you might consider large-cap stocks, which are established companies, mid-cap stocks, which are growing companies, and small-cap stocks, which have high growth potential. It's important to remember that portfolio construction is not a one-time event, but rather an ongoing process that requires regular monitoring and adjustments. As your life circumstances change, so should your investment strategy. If you're finding this information valuable, don't forget to give this video a thumbs up, subscribe to the channel, and hit the notification bell so you never miss an update from CRAIGTRADER. As we've explored throughout this comprehensive guide, the stock market can seem like a complex and intimidating world. But beneath the surface lies a powerful engine for wealth creation, one that's accessible to anyone willing to learn the ropes and embrace the journey of becoming a savvy investor. Remember, you don't need to be a Wall Street guru to succeed in the market. With the right knowledge, a sound strategy, and a long-term perspective, you too can harness the power of compounding to grow your wealth and achieve your financial goals. Think of investing as planting a tree. The best time to plant a tree was 20 years ago, but the second best time is today. The earlier you start, the more time your investments have to grow, allowing you to reap the rewards of compounding returns. Imagine a small acorn growing into a mighty oak, providing shade and shelter for years to come. That's the power of long-term investing. Whether you're saving for retirement, a down payment on a house, or your children's education, investing in the stock market can help you get there faster. It's about taking control of your financial future and building a legacy of prosperity for yourself and generations to come. Congratulations on taking this important step towards financial literacy and empowerment. By understanding the fundamentals of the stock market, you've equipped yourself with the knowledge to make informed decisions and navigate the exciting world of investing. Remember, knowledge is power, but it's only the first step. Now comes the exciting part. Putting that knowledge into action. Start by defining your financial goals, assessing your risk tolerance, and choosing an investment strategy that aligns with your individual circumstances. Don't be afraid to start small. Even a modest investment made consistently over time can grow significantly thanks to the magic of compounding. Remember, the journey of 1,000 miles begins with a single step. As you embark on your investment journey, remember that you're not alone. CRAIGTRADER is here to support you every step of the way, providing you with the resources, insights, and community you need to succeed. At CRAIGTRADER, we believe that financial education is the key to unlocking your full potential as an investor. That's why we're committed to providing you with the tools, resources, and community you need to thrive in the ever-evolving world of finance. But don't just take our word for it. Join the thousands of savvy investors who have already benefited from CRAIGTRADER's insights, tips, and strategies. Subscribe to our channel, hit that notification bell, and become a part of our thriving community of like-minded individuals who are passionate about achieving financial freedom. And don't forget to check out the link in the description for access to our free newsletter, packed with even more valuable content, stock tips, and exclusive insights. We're dedicated to helping you make smarter investment decisions and achieve your financial dreams. Remember, the stock market is not a zero-sum game. When you invest in companies, you're investing in innovation, growth, and the future. So go forth, invest wisely, and let's build a brighter financial future together.